Alrighty, everybody, welcome to episode 4 of Dealbox Daily. You are joined by Jonathan Alvarado, your host, and I'm joined by my co-host, John Nance, CEO of Dealbox Inc. Say hello, John.
Hi, everybody. Thanks for having me.
Together with us today is Richard Johnson, special guest for the show today from Texture Capital CEO. Richard, say hello to our audience.
Hi, guys. Hi, everyone.
We're really excited to have Texture with us today, and Richard particularly, to walk through some very exciting topics. But very quickly, let me tell you a little bit about Dealbox Daily. We are a daily fountain of information on all things crypto and blockchain. We're going to handpick the most important pieces of information on all things digital assets, fintech, blockchain, of course. If you're an entrepreneur, best practices on private placements. If you're an investor, best practices on alternative investments. We cover category design topics. Without further ado, I'm going to turn it over to my co-host, John Nance, to dive into today's segment.
All right, great. Well, thanks to the audience for making some time to join us here today. I'm particularly excited about this conversation and to have Richard here with us. So, Jonathan, thanks for having us both on today. For those of our listeners who are not familiar with the ATS market, ATS stands for Alternative Trading System. It is a registration available via the Securities and Exchange Commission that allows a platform to basically become an electronic communications network for the purposes of order matching and building order books for the purchase and sale of private securities in an electronic trading environment. And so over the last couple of years, and ATSs have been around for quite some time, mind you, maybe Richard is willing to share a little bit of the history of that environment with us. But up until about 2018, there hadn't been much meaningful volume occurring on these exchanges. And now with the advent of newer blockchain technology being integrated into these systems, we're actually seeing a rebirth of the types of momentum, trading volume, issuers and investors that are starting to consider using these environments for the purchase and sale of private company securities in a new environment that isn't the OTC Markets QX or bulletin board, for example, or the larger scale markets of the NASDAQ and the NYSE or the New York Stock Exchange. And so I'm going to ask Richard a few questions here. I'd like him to chime in. Richard, maybe you'd be able to tell us a little bit either about the history of the ATS world and how and why Texture chose to become an ATS.
Yeah, thank you for the question. It's a very interesting history, actually. I've been in the electronic trading and ATS space since I got into the business in 2000, worked at one of the first ATSs, which is operated by a company called ITG, and it's called Deposit System. So as you mentioned, ATS, Reg ATS is part of the Exchange Act. It was added to the Exchange Act around 1994 or something around that time. And the genesis of it is actually a fascinating story. There were two academics who wrote a paper. They were analyzing trade data. They were financial economists, and they wrote a paper saying, how come, the entire paper, why does NASDAQ only quote in even eights? I may not have the exact title right. We can kind of put it in the podcast notes afterwards. But basically, in the 90s, it was pre-decimalization. So everything was in fractions, which sounds kind of ridiculous to anyone born today. But I did actually experience about a year of pre-decimal trading, which is quite interesting. So you only have basically 8 price points for every dollar. So something could trade at like 47 1/8, 47 1/4, 47 3/8, and so on. And what these academics discovered was that it never traded. There was never a bid at 47 1/8 or a bid at 47 3/8. There's only bids at even numbers. And the answer to the question why NASDAQ market maker is only quoting in even eights, the answer was collusion. There was a whole investigation, and they found out that, I've got stories from my friends back then. It's like they would get calls from market makers saying, "Hey, what are you doing out there bidding at 3/8? Put it up to a half," and things like that, because they wanted to keep the spread artificially wide. Because the wider the spread, because market makers are making money off the spread. The wider the spread, the more money they make. So in response to that collusion scandal, the SEC implemented Reg ATS, and Reg ATS is basically was designed to create competition in the space and allow other market participants to come in there and match orders electronically. Because before that, we just had exchanges and OTC desks and market makers. And so ATS is a new construct that allows broker dealers to provide an electronic matching service for orders. It's led to tremendous innovations in the space, because also back then, remember, you only had 2 exchanges. You had NASDAQ and NYSE, and that was it. So some of the first ATSs to come out were like the one I mentioned, POSIT, which is an institutional one. And then the real burst of innovation was in the what's called ECNs, which are electronic communications networks, which is kind of like a subset of ATSs, I guess. The famous ones being, Archipelago, Island, Brute, a number of these different ECNs. So suddenly you went from a marketplace where you had NASDAQ and NYSE as the only two execution venues. And by the way, NYSE would only trade NYSE stocks, and NASDAQ would only trade NASDAQ stocks. And there was the American Stock Exchange. So there was another one. But then you started having all these other ECNs pop up, which would trade securities of both that were listed on both NASDAQ and NYSE. They led to some tremendous innovations in order types, hidden orders, smart order routing. So you'd start having, like I said, instead of one venue to go to, you'd have multiple. How do you get the best price across multiple venues? You need smart routers, you need algos. So all this kind of electronic innovation really was kind of spurred by that original Reg ATS. It's in fact been tremendously successful, almost too successful. You see some stats on market data right now. One of the concerns is that whereas exchanges used to have 100% of, well, at least like whatever it was, 80%, 90% of the market, that's gone down now. So exchanges only execute around 60 to 55% of flow, with a lot of it being routed to non-exchange venues, some of which are ATSs, not all of them, but some of which are ATSs. This is in the public markets. Nearly all ATSs that I've been speaking about have been for public NMS securities. As I mentioned, I was at ITG when we were running deposit ATS. I then kind of, via an acquisition, went to LiquidNet, which is one of the most successful ATSs. And then I spent some time at SocGen, where we were connecting to all the different ATSs on the street. What we're doing at Texture is an ATS for private securities, which is very rare, but it's also, on top of that, it's an ATS for digital securities, which is even rarer. There's only a few of us out there. Obviously, blockchain is the new innovation we're trying to harness. And so the ATS is built kind of on top of the blockchain, matching the orders. And what we want to do is we get have those, when those trades happen, have that recorded directly to the blockchain. So we kind of improve transparency. And then, of course, we've got all the other attributes of the digital securities, such as the automation and smart contracts and so forth. So that's kind of the history of the ATS, and we're kind of excited to be innovating again with this within the regulations, using some great technology.
Yeah, that's wonderful, Richard. Thanks for sharing with us. Anybody who's not familiar with the ATS landscape just got a crash course from one of the experts who's been around in this environment for over 20 years. So we hope you enjoyed listening to Richard's background on that. You can tell that there's a lot to this industry. There's a lot to this technology. It's not simple. As an issuer or an investor trying to unpack and understand these things, you definitely want to make sure you're aligned with somebody like Richard or somebody like DealBox to have these types of discussions and understand what are the exemptions you can file for. How do you go about doing these things compliantly? This is not something you want to be doing on your own, as you can tell from Richard's background. So maybe we'll spend a couple of minutes talking about both sides of this marketplace. So the standpoint of an issuer or a seller of private stock, equity, debt, what have you, on an ATS, and then also what it looks like on the investor side. Richard, you mentioned that dark pools were born out of this. Institutional investors were using the ATSs to handle some of the flow off of the exchanges. But I don't think we spent much time talking about maybe like the retail environment and what the implications for retail individual investors might be with these new types of ATSs that Texture is working on. So let's talk about the investor side first. So on the investor side, when we think about retail adoption for the utilization of ATSs, what types of things is and are Texture looking at from bringing retail adoption to a previously institutionally driven environment?
Yeah, it's a challenge. We are focused on private securities, as I mentioned, and the SEC has really been, they've relaxed a lot of rules for private securities, but at the same time, they put up gates. So there's fewer reporting requirements for private companies, which makes it easier for them to raise capital. They don't have to jump through the hoops like Sarbanes-Oxley and so forth. But the quid pro quo on that is the SEC says, you can only sell it to sophisticated investors, which is rightly or wrongly mainly defined by wealth. And so there's a few exemptions to you can publicly register your security, and then it becomes what's called an NMS stock, National Market System stock, like Google, Microsoft, Salesforce, all these companies. Or you can do it privately. And the exemptions to registration, one of them is a Reg D, Regulation D of the Securities Exchange Act, I think, where you can sell, you raise an unlimited amount of capital, but only from accredited investors. There is one kind of clause in that rule is that after the 1 year holding period, there is an option to kind of start selling it to non-accredited investors. So that's what I think. I believe that's one of the other ATSs in the space is how they're kind of approaching that. Another way is to look at another exemption from registration for private issuers, for smaller private issuers, which is Reg A. That has been much more challenging in the blockchain space. Reg A is kind of, they sometimes call it an IPO light. So you don't have to go through the full S1. It's designed for issuers raising up to 75 million. That just got increased from 50 million. There's different tiers. We can get into that. But it has to be, the offering has to be qualified by the SEC, and they've been wary to qualify digital offerings. They qualified 3 that I'm aware of, which is Stacks, Props, and Exodus, and they all ended up spending a lot of money on lawyers. So that's not fully accessible yet. But I think what's good thing is that they have been breaking the ground here, and a lot of this information is public. So we do want to kind of start working with companies doing Reg A and creating a retail marketplace, a retail ATS. We don't have it now, but adding that functionality and support for those types of securities on our ATS in the medium term.
Excellent. Yeah, that's great stuff. Again, I mean, we just keep reiterating our point here, right? There are so many components to understanding how to utilize these systems. And firms like Texture and Dealbox and our collective ecosystem have been thinking through these things for years now. We have backgrounds in doing these things. And so what we're doing, as Richard just said, is a lot of this information is public. So we keep our ears incredibly close to the ground. We scour regulatory changes. We take a look at what other companies are doing, how they're spending money, how it's working out for them, and then making minor nits and tweaks everywhere we need to prepare for that, our learnings from these other experiences of these groundbreaking companies, as Richard said. One of those points I wanted to touch on too, that we've seen some interesting momentum on, is a recent Exchange Rule Act. This is namely 15C211. This is slated to go into effect on September 28th of 2021. That's this year. So we're about almost exactly 2 months away from that date. And effectively, what's happening here is the SEC is requiring stricter disclosure requirements, updates to documentation for OTC listed companies today. There are certain issuers out in that environment. If you're one of them and your company trades on an OTC market today, you might be asking yourself, what is it I have to do from this new regulation adoption into understanding how are my reporting requirements going to change? What do I need to do from my auditing and back office standpoint? How much more money am I going to have to spend to maintain my liquidity on the OTC markets? And so if you're an issuer in that situation and you have an OTC listed company and you want to learn more about these things, please reach out to us directly. There'll be some links in the end of the podcast on how you can get in touch with us. But for the most part, we are seeing today a number of existing OTC companies that are filing to remove their listings off of OTC markets and finding other sources of liquidity, like these ATS environments, to replace the difficulty of their reporting requirements, the inefficiency of the trade settlement processes, the costs associated with listing and maintenance on these OTC markets and other types of exchanges. So, Richard, I might be curious to hear your opinion from the standpoint of what types of companies that might be subject to these reporting requirements, or are you seeing anything out in the landscape now where people are in these situations reaching out to Texture, or are you proactively speaking to businesses about how this is going to change and what we might be able to do for them?
Yeah, I did. I had a few conversations with OTC listed companies. Different types of experience. There's one company where they very much regretted going public. They'd in fact gone public on NASDAQ initially via a SPAC a few years ago, and it hadn't worked out, and then they got downgraded to OTC markets after that, and they felt they were kind of stuck. They weren't too happy about it. I speak to other folks who, even though they're on OTC markets, they still want to raise via PIPE, or they still want to do a private placement anyway. I'd be interested in having conversations with companies wishing to move over, but caveat here is that we don't have reporting requirements per se. It's a private company ATS, but we do expect a bit of transparency from the issuers on our platform. We want to have a marketplace where investors are able to kind of make informed investment decisions about the companies on their platform, and we actually have in our documents that we require them to have some kind of transparency around quarterly updates. Audited financials, if available, this type of information. So we still expect that, and we think that's as a marketplace, we think that's the right thing to be providing for our investors and for our community. And I think that's kind of where you guys come in as well. You guys are great at that stuff and helping companies, communicate and get their get their story out there.
Richard, where do you see opportunities in the short term for Texture and Dealbox to work together? I know that we secured the partnership a little over 4 or 6 weeks ago, but out the door, where do you see some of the low-hanging fruit, and any ideas or comments for our audience on the long term?
Yeah, great question. So just for our audience, we did do a press release, like you said, maybe 4 or 5 weeks ago. We have a partnership to work together. Dealbox is in the investment packaging. We're in the primary issuance and secondary trading space. And part of that deal is that essentially we'll kind of collaborate on the mutual clients. We'll try to bring new clients and vice versa. We've actually moved forward with that relationship, as we planned to all along. And I started working with one of your companies and one of your other analysts, Todd, about potentially bringing this firm onto our platform. And we went through a number of discussions. We talked with you about your service, and it was kind of at a more theoretical level, I'd say. And having actually now we're working with a company, I see like really hands-on the value you bring to the table, and how much easier you're making our lives, because we don't have to do as much due diligence. And it's really kind of got me much more excited about the relationship. So we've got one, I don't know if we can say the name of it, but we'll be announcing it in due course, I think. One of your kind of partner companies will be coming onto our platform. And then I'm looking forward to kind of talking to some of the others, and also bringing more clients to you, because you really do have a great offering.
Lovely. John, any closing comments for our audience here before we wrap up today's episode?
Yeah, sure. Thanks again, everybody, for joining us. I hope you found this valuable. Again, in the links to this podcast, you can find ways that you can get in touch with Dealbox or Texture following the recording. Last thing I'll say is that as you start to look at the conversations that we're having today around investment packaging, you've heard us talk about diligence, you've heard us talk about regulations and restrictions and exemptions, and how to connect all of these pieces. It's very important that if you're an issuer out there, if you're an entrepreneur looking to take advantage of some of the things that we're talking about, that you understand that there is no one-size-fits-all company to help you go through these things. You're not going to achieve it with a law firm. You're not going to achieve it with just us. You're not going to achieve it with just Richard. We want our clients and the entire entrepreneurial industry and issuer base to understand that it really takes a village to do these things. And so you want to be working with as many people that are as closely coordinated as possible when it comes to doing these things. Otherwise, you'll find yourself simply achieving a goal and then looking at a gap on how to get to the next one. So you want to be able to make sure that you're streamlining these processes. And eventually, what the capital markets are going to look like, and this is our long-term vision here at Dealbox, is starting all the way from an idea that needs to be built into an investment packaging format to raise capital, all the way out to the exact exit of that business. And when those processes are mapped and are working harmoniously, what it does is it brings a lot more efficiency into the capital markets from both an entrepreneur standpoint and an investor standpoint. There are serious systemic issues in the private markets that companies like Dealbox and Texture are looking to solve. And we're just looking forward to sharing this stuff, with everybody in the world. And we can help you think through it all. Please let us know.
Absolutely. There you have it, folks. Please stay tuned for the next episode happening today at 3 p.m. Pacific, 7 p.m. Eastern. Thank you very much for joining me, gentlemen. We look forward to having you next time.
Thanks for having us, John.
Thanks, John. Thanks, Dealbox.